Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Monday, the 31st of July. Starting off with the FTSE 100, where we've got that rising 200-day line. We're hoping that the 50-day line will curl up and then we'll go into a golden cross, hopefully sometime during August. That could power this market through the February resistance line there around 77.50 and then take us up to the top of a post-March broadening triangle as high as 8200, maybe sometime by September, all of which seems rather unlikely given the fundamental backdrop, but at least on the downside, if we break back below the 200-day moving average, 75.80, then the worst case scenario at the moment is seen to be the June resistance line break level of 74.50. But to the moment, still assuming that this market will stay above the 200-day line and break that February resistance line and trade higher. One of the reasons for being more optimistic on the FTSE is that we're hoping that it will follow the other major indices, such as the DAX, which has had a great year to date. We're just breaking out through the old May-June resistance around 16,300 and above that, looking for as high as 17,200 at the top of the one-year trend channel there on the daily chart by the end of August. The downside at the moment should be stemmed by the 50-day line currently rising around the 16,000 level. RSI at 66, so not overbought yet, which I suppose is a plus. On to the Dow, and here we have a situation where we're just consolidating above that old March resistance line target, 35,200. Above that, we're looking for as high as 37,300. As soon as the end of next month, but obviously we've got a clear recent resistance around 35,700, and just let that RSI, which has been in the overbought area, to cool off, or let it cool off a bit over the near term. If we break back below that 35,200 level, then the support seen as coming in around 34,500, which was the old May and the old June and July resistance. We've got a rising 50 and 200-day moving averages there on the daily chart, so not expecting anything worse than that if the rug is pulled at any time. Moving on to Bitcoin, which has been disappointing over the course of the summer, and here the main hope for the bulls is that we find support at and above the 50-day line, currently rising around 29,300. If we can break that line of resistance from July, which I suppose we're trying to do at the moment, if we look closely, there's an attempt today, but at the moment it still looks like we're rather stuck in the 29,000 area and the 50-day moving average area, and we'll need a fresh impetus to head higher. If we break down, then the old initial June resistance around 27,500 seen as being potential support. End of day close through 30,000 is what's required really probably for this market to head up to the top of that one-year trend channel at 36,000, which could still happen by the end of next month. There's still time. RSI at 44, so that might be something else for people to wait for that to get back above 50 before assuming that the recent, rather extended 6-week consolidation has finally run its course. On to the stocks, and first on the list is Allergy Therapeutics. Here, very interesting type of pattern here, crawling higher. We broke that resistance there around 2.1 pence from the middle of the month, and above that we're looking for at least the 50-day line at 3.4 pence. Best case scenario by the end of next month up to 4.6 pence at the top of that rising trend channel from last month. On to Blackbird, which I've covered quite a few times in the recent past now, and yeah, I think I covered it yesterday even, if I can remember that far back. Here we were looking for 12 pence while we're above the 8 pence level, and that looks like that will be achieved hopefully over the next 24 hours or something like that. Then that means we can upgrade our target, and next target up should be up to around 14 pence, which hopefully we'll get over the next 2 to 3 weeks. Big picture target here up towards the upper teens, but let's just go for 14 while we're above 8 on Blackbird. Nice turnaround there with a rising 50-day line up to that bear trap at the beginning of the month below 6 pence. Stock which I covered yesterday in my weekly review and covered on Friday as well is Graft Polymer. I covered that on the Bulletin Board Heroes. Here we were looking for 4 pence, up to 4 pence, which was basically the last resistance, July. Looks like we'll head towards there hopefully by the end of next month. Nice double bottom pattern there, unfilled gap to the upside, which is one of our favourite signals, and bullish divergence. So 4 pence really currently looking as though that'll be the minimum on the upside for the shares. Upside value while we hold above 2 pence at the moment, which is recent support. On to a stock which I haven't covered for a while because it's been in a bit of a retracement, but Harland and Wolff, good news, or decent news today. We've got a bear trap island reversal, so we gapped down at the beginning of the month and gapped higher to close the month, which is pretty impressive. That tends to be one of the strongest signals, that bear trap island reversal, and that means we're looking not only for this market to break that November resistance line around 13 pence, but head as high as 18 pence by the end of next month, which is a May resistance line projection. Upside value while we hold above the 10.5 pence area, which was neckline resistance before we broke higher last week. Moving along to Jersey Oil and Gas, which is finally delivered for the bulls, at least a little bit. Here we broke a falling wedge with room to spare on Friday, broken through the 50-day line today at 183 and above 183, looking for 220, which was the previous call. So good to see that stock finally moving. Onto a stock which may be slightly controversial for some, more acquisitions. Here you can see that just the first signs of life here after the RSI went down to, I think, 2 out of 100, which is takes some doing. Neckline resistance there at 0.6 pence. Above that, there's a chance that the shares could head up to the top of that gap, the bottom of that gap rather, at 0.75, maybe over the next 2 to 4 weeks. But the key here is holding above 0.6 and obviously not making any new lows in the meantime. On to Novacyt, which has had a little bit of a funny ride over the recent past. Here one can see that the shares are sort of tussling with the 200-day moving average, and here we've had a little bear trap, sort of 2-3 days of bear traps below that grey line there at 60 pence. Above 60 pence, we're still looking for as high as 82 pence, which is a February resistance line projection. It'd be nice to see an end of day close above the resistance line there from March at 65 pence as a trigger for further gains. And the unfilled gap to the upside, or the filled gap to the upside that we had in the middle of the month, is a decent signal for that situation. The key here is staying above 60 pence. Moving along to Serabi, which I haven't looked at for quite a while. Here you can see that we've had a falling wedge breakout and a bear trap gap reversal, bullish divergence as well, which is all sort of, those are the main triggers that we like. 3 or 4 triggers there, and pushing through the 50-day moving average as well at 25 pence. Main thing here is that we're above that May resistance line there at 24 pence. Above that, we're looking for as much as 38 pence by the end of next month. And it would be nice if we had an end of day close today above that 50-day line around 25 pence. Another stock which has come back after a leave of absence is Scancell. Here we've had a bear trap from below the September support there at 10.8 pence, and a bear trap gap reversal, given that the shares have gapped higher today. Still a bit early to say that the shares are finally on their way, but the neckline resistance there at 11 pence. Above that, looking for the shares to break through the top of that falling wedge at 12.5 from February and head up to as high as 17 or 18 pence by the end of next month. But the key here is staying above the 10 pence level. I think that would be the best signal for the shares. Onto a stock which has been basically horrible over the recent past. Here you can see Tomco just falling again and again and again, but looks as though we've got a double bottom there. We've broken neckline resistance there at 0.09 pence, and above that we've got the chance of the shares to head as high as 0.2 pence is the best case scenario over the next month. If you're cautious, you'll probably just be targeting about 0.16, which was the recent resistance on the way down. But there's bullish divergence there, and the shares, if they close above the 50-day line, that would be a better look, as they haven't been above the 50-day line since back in March. So that is quite a turnaround. On to the star of the show by quite some distance, Upland Resources. The shares managed to hit our previous target there at 0.95. Above 0.95, we were looking for a crazy target as high as 1.5 or 1.6 pence. The high today so far 1.32, so it's not bad. Doesn't look quite as crazy as before, but still the view is that 1.5% should be 1.5 pence should be the near-term target. We've got an imminent golden cross there, so probably tomorrow we'll have a golden cross between the 50 and 200-day moving averages, and above 0.95, as I said, up to 1.5. Ideally, we stay above the 1.1 pence area ahead of a move to 1.5 pence plus. Finishing off with Vela, which has delivered a turnaround here, breaking out of that falling wedge last week, and then finding support at the 50-day line at 0.016. Above the 50-day line, we're looking for 0.028 as soon as the end of next month. So a narrow bear trap for the shares just below the March support there, and that should push the stock on towards that 0.028 level. That's it for me today. More updates tomorrow.